Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at iHeartMedia, ticker symbol IHRT. This is a viewer requested video. It is another penny stock. We're going to see if their sales outweigh their income. This could be a really quick video or it could be a rabbit hole. So let's go ahead and subscribe and find out together. So looking at this chart, it does not look horrible. We could see it IPO'd around 2019, around, gosh, $18. Went all the way down to $4, went as high as $28, now down to $1. Um, I do see a potential cup and handle. We do have our cup height being like right here around 21, coming around. um, Possibly, that's a big possible. We do see the relative volume is very high, but there is quite a bit of red candles intertwined with the green candles here. Moving on down, looks like money flow is actually going up, which is good. We're gonna go ahead and get this loaded right now. This will show us what institutions and hedge funds are doing. They're buying the boat or dumping. Momentum is on the side of the bulls for now, but overall, the relative momentum is pretty low. So we can see a couple months ago, this stock was 93 cents, no, 81 cents, and now it's $1.26. So it's on the bull side, but I am concerned. Strength is low, and I can't tell if it's coming back up. We're going to have to run my calculation on this one and see what the potential stock price could be. Before we do that, our sales are pretty flat going back to 2019 to 2023. Um, Not sure what's going on there. Shares outstanding look like they have doubled the supply on the retail investors. Not good. Earnings per share, not good at all. $146 a share to negative 13 to negative 1 to negative 1.7 to negative 7.39. Yeah. So let's go ahead and run my calculation here. We're not going to include the market cap because it is not over 1 billion. Our income is negative 898,910,000. Sales are 3,740,000,000, which is good. Cash on hand, let's go and check it out. Before we look at cash really quick, so Q1 of 2024, they did 799 million. Last year, they did 811 million, so they're down 12 million from a year ago. Not too bad in the grand scheme of things. If we're looking at Q4 of last year, they were at 1 billion 66 million. Last 2022, the year before that, Q4, they did 1.125 billion. So I'm starting to notice a trend. I don't know if you're noticing as well. Revenues are declining. Yeah, we're seeing that across the board. Okay, now we're going back to our calculation. They do have 361,400,000 total debt. 5 billion. I think we just went negative. 5,965,870,000. Yeah, we're negative. So we can see we're negative here. This automatically disqualifies this calculation, so it does not make sense to continue. Total assets 6.7 billion. Total liabilities 7.1 billion. Look at that red flag. When when liabilities exceed assets, the B word starts to come into play. Bankruptcy. Oof. Chairman and CEO, I mean, good for you for buying, but dude, this is a red flag if I've ever seen one. It all turned south last year. So I'm guessing there's a lot of short on this stock. 5%, I could see that going up. So yeah, this my calculation is going to give us a negative number, which is not plausible. So this is what I mean. I'll just go ahead and spell it out for you. There's 112,990,000. So again, a negative $24 stock price. We're we're fighting a battle at $1.24 right now. So this stock is disqualified from any further discussions. Institutions own 74%. I'm going to guess maybe less. 72%. So insider or institutions and hedge funds are selling. What are the big boys and girls doing? Vanguard sold 41%. BlackRock decreased 3%. Douglas, oof, earlier this year they bought 7 million shares. I wonder if they're regretting that. Pacific Investment added 1.6%. Yeah, overall, give this one a year to turn around. Honestly, just put this on the back burner because it needs maturity. Um, in terms of where they can make things more efficient, let's go back down here and look. I mean, their debt, first of all, they're paying down their debt, but dude, they're just getting eaten alive. They need to really attack that debt a lot more. Um, do some layoffs, cut the CEO, cut the C-suite's salaries. Like, dude, you guys make 3.74 billion. Go through a rough year. Go through a rough year. It'll be worth it. Everybody take a pay cut. No bonuses. Just honestly, if you want a company to survive, it's got to be a collective mindset. I don't see that here. They have great margins, not profitable. Just sacrifice a year of low pay. That's my recommendation. They have 10,800 employees. I'm not saying lay people off, but honestly, there needs to be some more efficiencies because this company is not going to survive, in my opinion. Um, yeah, they do have adequate cash, but come on, just address the debt. All right. So this is a no go for me. Check back in a year. If you guys made it this far, thank you for watching. Have a great day.